In March of 2001, Ben Horowitz stood in a conference room while his investment bankers, in the most diplomatic language available, told him not to take his company public. The dot-com bubble had been collapsing for a year. The Nasdaq had lost roughly half its value over the previous 12 months. Almost no technology firms were going public, and the few that did were being punished by the market. LoudCloud, the managed services business Horowitz had co-founded with Marc Andreessen 2 years earlier, was burning cash at a rate that left it perhaps 6 months of runway. So Horowitz did what the bankers were politely begging him not to do. He took the company public anyway. The deal priced badly. It raised less than what they had hoped, and it bought him just enough time to discover that the company he had taken public was not the company he was going to need to save. That is the moment most readers of his book have backwards. This is the founder's bookshelf. 1 book a week, 1 sharp take, no fluff. If that sounds like your kind of channel, the subscribe button is your friend. The Hard Thing About Hard Things was published in 2014, 7 years after Horowitz sold Opsware, the company LoudCloud became, to Hewlett-Packard for $1.65 billion. By the time the book appeared, he was already 5 years into running Andreessen Horowitz, the venture firm he had founded with his old partner. The book arrived in the middle of what now feels like the high noon of Silicon Valley founder worship. The Lean Startup had been published 3 years earlier. Peter Thiel's 0 to 1 came out the same year. Every conference stage in San Francisco had a founder explaining how their company was changing the world. Horowitz's book read differently from all of it. It was not a methodology. It was not a manifesto. It was, on the surface, a memoir wrapped around a series of essays, each chapter opening with lyrics from a rap song that Horowitz felt captured the chapter's mood. Most readers picked the book up expecting management advice and found themselves reading something closer to a war diary. The reviews praised it for being honest. It was called Raw. It was called the only honest book about being a chief executive officer that anyone had bothered to write. But honest about what exactly? That is where the conventional read of the book falls short. If you ask most readers what The Hard Thing About Hard Things is about, they will tell you it is about how hard it is to run a company. They will mention the wartime versus peacetime distinction, which has now drifted into general management vocabulary. They will mention the chapter on layoffs. They might mention what Horowitz calls the struggle, the gnawing fear that you have failed, and that everyone is about to find out. The word that comes up again and again is courage. The book is read as a book about courage. That read is not wrong. It is just shallow. Because if you go back through the book and pay attention to what Horowitz actually does in each story, you notice something the surface read misses. Almost every decision he describes turns not on whether he was brave enough. It turns on whether he was willing to look at and then say out loud what was actually true. The book is treated as a manual for surviving disasters. It is really a manual for the operating discipline that makes surviving disasters possible. Most readers think The Hard Thing About Hard Things is a book about courage. It is really a book about candor, and the courage is what you find on the other side of the candor.
The framework everyone remembers from the book is the wartime-peacetime distinction. A peacetime executive operates in a market where the company has a clear lead, where the strategic question is how to extend that lead, and where the central management problem is how to maintain culture and creativity at scale. Horowitz uses Eric Schmidt's tenure at Google as the canonical peacetime example. The company was the dominant search engine. The cash machine was running. The job was to not break things. A wartime executive operates when the company faces an existential threat. The cash is running out, or a competitor is taking the market, or the product is failing, or all three at once. The decision space is narrower.
The tolerance for ambiguity, internally, must drop close to zero. Steve Jobs returning to Apple in 1997, when the company was perhaps 90 days from insolvency, is the canonical wartime case. Horowitz's argument, as most readers receive it, is that these are two different jobs, requiring two different personalities, two different communication styles, and two different relationships to the team. The peacetime leader listens. The wartime leader decides. The peacetime leader builds consensus. The wartime leader violates consensus to save the company. This is the part of the book that has been quoted into the ground. It is also the part of the book where the surface read leaves the most on the table. Because if you read the framework carefully, the wartime-peacetime distinction is not really a typology of leaders. It is a typology of situations. Horowitz is not saying you are one or the other. He is saying the same person must, at different times, be both. The most important skill is not knowing how to be a wartime leader. It is knowing which kind of moment you are in. That is a much harder problem than the framework first lets on, because the natural tendency for almost any leader of a venture-backed company is to overestimate how much peacetime they are in. The press is friendly, the board is encouraging, the numbers are explainable, the narrative is intact. And inside that narrative, the unpleasant facts of the operating environment can be reframed again and again as temporary. The Horowitz framework, read carefully, is not a tool for choosing your mode. It is a tool for forcing yourself to face the question of which mode you are actually in. And the answer to that question depends entirely on whether you have built a system that brings you the bad news fast enough to act on it. This is the question the framework gestures at, but does not quite ask out loud. How does a chief executive of a venture-backed company, surrounded by people whose incentives are to manage that executive's mood, actually know whether they are in wartime or peacetime? How does anyone inside the reality distortion field that surrounds successful operators get accurate information about their own situation? Horowitz's answer to that question is the real argument of the book, and it is found not in the chapter on wartime versus peacetime, but in the chapter that almost every summary skips. That chapter is about something Horowitz calls telling it like it is. On the page, it does not look like the most important chapter. The book has more dramatic material elsewhere. There is a chapter on laying people off that has been excerpted in business school case studies. There is a chapter on demoting an executive who was also a personal friend, which is genuinely painful to read. There is a chapter on selling the company under conditions that would have crushed most operators. Next to those, the chapter on telling the truth feels almost procedural. That is precisely why most readers skim it. But pay attention to what Horowitz actually argues there. A chief executive's most important job, he writes, is to create a context in which the company can hear the truth about its own situation. Not deliver a vision, not motivate the team, not raise the next round. Create the conditions under which bad news travels upward as fast as good news, and gets acted on with the same urgency. This is harder than it sounds, and the reason it is harder is that every other incentive in the company runs the other way. The chief executive officer wants to feel good about the company. The vice presidents want to make the chief executive officer feel good about their departments. The managers want to make the vice presidents feel good about their teams. The result is what Horowitz describes as a slow degradation of the company's information environment, where the worse the situation gets, the more carefully it is presented upward, until eventually the CEO is the last person in the building to find out what the people on the front line have known for months. The famous Horowitz stories, the ones everyone quotes, are the downstream consequence of either having built that system or not having built it. The layoff chapter is dramatic because Horowitz had been telling his team the truth about the financial situation for long enough that when the layoffs came, no one was blindsided. The demotion chapter is dramatic because Horowitz had built enough trust with the person being demoted that the relationship survived the conversation. The chapter on selling the managed services business of LoudCloud to Electronic Data Systems, the deal that converted LoudCloud into Opsware, is dramatic because Horowitz had been telling his board, in plain language, that the existing business model was not going to work, long before the board was ready to hear it. The dramatic moments are not where the work happens. The dramatic moments are where the work pays out. This is the structural point most readers of the book miss. Horowitz is not really teaching CEOs how to be tough in crises. He is teaching them how to build the truth-telling infrastructure that makes toughness in crises possible. And the truth-telling infrastructure is built, painfully, in the dozens of small moments per week when a leader has to choose between a comfortable version of the conversation and an accurate one. If you read the book looking for stories about heroic leadership, you will find them, and you will mostly miss the point. If you read it looking for the small, structural choices that made the heroic moments possible, you start to see something else. You start to see a book about institutional honesty, dressed up as a book about personal courage. This is also the place where the book, 12 years after publication, starts to show its age. The argument about candor, as Horowitz presents it, depends on a particular kind of organization. The chief executive is the central node in the information network. Bad news flows up to that node. Decisions flow down from it. The company's tolerance for the truth is essentially the CEO's personal tolerance for the truth, projected outward through the management chain. This was a reasonable model in the world Horowitz operated in. LoudCloud and Opsware were companies of a few hundred people, working largely in the same buildings, in an era before company-wide messaging tools and before remote work was a default. The chief executive could plausibly sit in most of the meetings that mattered. The information environment was small enough that a sufficiently committed truth-teller at the top could shape the culture by force of will. That world is not the world most of the operators watching this video are running their companies inside of. The modern operating company, even at the scale of 50 people, is a distributed information system. Engineers in 3 time zones communicating through a chat tool. Customer feedback flowing through a support platform that the CEO rarely opens. Financial signals arriving through dashboards that lag the underlying reality by weeks. The chief executive is no longer the central nervous system of the organization. The chief executive is one node with degraded peripheral vision in a network that mostly runs without them. In that environment, the personal virtue of the truth-telling CEO is not enough. The discipline of candor that Horowitz argues for needs to be embedded in the operating system of the company, not just lived out by the person at the top. It needs to be encoded in how meetings are structured, in how status updates are formatted, in how decisions get documented, in what kinds of disagreement get rewarded versus tolerated versus quietly punished. The personal candor of the chief executive is necessary, but no longer sufficient. The book's frame, the heroic leader who tells everyone the truth, is right in spirit, but increasingly thin as a mechanism. This is not where the book is wrong, it is where the book needs extending. The most useful way to read The Hard Thing About Hard Things in 2026 is to take the underlying argument about candor and ask how to build the version of it that does not depend on the CEO being in every meeting. What are the structural moves, the meeting formats, the documentation habits, the review cycles that institutionalize the discipline Horowitz lived out personally? That is a book Horowitz did not quite write, but it is the book his book is pointing at. Which brings us back to the thesis. The Hard Thing About Hard Things is read, almost universally, as a book about courage in the face of disaster. That read is not wrong, but it is operating one level above where the book actually lives. The book is really about the slow, unglamorous, almost invisible discipline of building an organization that can tell itself the truth. The dramatic moments, the ones that fill the chapter excerpts and the social media quote cards, are the harvest. The discipline of candor is the planting. And the entire book, read carefully, is a meditation on a single uncomfortable observation. Most organizations cannot tell themselves the truth, and most chief executives do not realize this until it is too late to fix. The reason the wartime decisions in the book look like courage is that by the time they happen, the alternative looks impossible. Of course you have to lay off 20% of the company. Of course you have to demote your friend. Of course you have to sell the business you have spent 5 years building. Read in isolation, these decisions look like acts of will. Read in sequence, with attention to what came before them, they look like acts of arithmetic. The hard part was not making the call. The hard part was creating the conditions, over years, where the call could be made on the basis of real information instead of preferred information. This is the worldview underneath the tactics. Management is a long accumulation of small candors that pays out, very occasionally, as the ability to make a hard decision quickly and cleanly. The leaders who freeze in moments of crisis are not less courageous than the ones who act. They are operating on worse information because they spent the previous 3 years building a company in which bad news did not travel. Horowitz never says it quite this directly, but the entire book is structured to demonstrate it. The Loud Cloud story works because the board got told the truth before the press did. The Opsware turnaround works because the executive team understood the cash position before the line managers did. The Hewlett-Packard sale, the $1.65 billion exit, works because Horowitz had been honest with his own team about what the company was worth and what it was not, long before the negotiation began. Once you see this, the book reads differently. The chapter on layoffs is not really a chapter on layoffs. It is a chapter on what happens when you have already been telling the company the truth for a year. The chapter on the wartime executive is not really a chapter on leadership style. It is a chapter on how to act on information that you have, in fact, allowed yourself to receive. And the chapter on telling it like it is, the one most readers skim, turns out to be the foundation everything else sits on. The lesson, restated. Courage is not the cause of the decisions Horowitz describes. Candor is. Courage is the byproduct of having lived inside the truth long enough that when the moment comes to act on it, there is no other available move. The leaders who appear courageous in crises are not unusually brave. They are unusually accurate. And accuracy is not a virtue. It is a habit, built over years, in small moments most outside observers never see. That is the book Horowitz wrote. And it is not, in the end, a book about hard things. It is a book about telling the truth before the hard things start.
So what do you do with this if you are running a company?
The first thing is the simplest and the one most people will skip. Audit your information environment. Sit down on a Saturday and ask yourself what bad news exactly you have not heard in the last 90 days. If the answer is none, the problem is not that there is no bad news. The problem is that the bad news is not reaching you. Identify which channels are clean and which are filtered, and notice who, specifically, is filtering them. They are usually not doing it consciously. They are doing it because the incentives in your company reward it. The second is harder. Practice giving direct feedback in moments where the stakes are low. The reason most chief executives cannot give hard feedback in a crisis is that they have not built the muscle in calm. Every quarterly review where you softened a critique, every all hands where you hedged a real problem, every board meeting where you presented a chart in a way that made it look better than it was, is a small subtraction from the bank of organizational candor you will need to draw on later. The reverse is also true. Every act of direct honesty, especially in low-stakes moments, deposits something. The third recommendation is structural. Build a relationship, formal or informal, with at least one person who is paid in trust or in cash to tell you that you are wrong. A board member is not enough. A coach can do it, a peer chief executive can do it, a particular kind of investor can do it. The job of that person is not advice. The job is calibration. You are using them to measure the gap between what you think is happening inside your company and what is actually happening. The fourth is more philosophical. Stop treating vision as your primary output. Treat clarity as your primary output. The chief executive's job, on Horowitz's read, is not to inspire the company toward a future. It is to make sure the company sees its present accurately enough to act on it. Inspiration follows from clarity, not the other way around. The most motivating thing a leader can do in almost any organization is to describe the actual situation in language that the team recognizes as true. That is, the hard thing about hard things, as it looks once you stop reading it for the war stories and start reading it for the operating system underneath them. If this is the kind of analysis you want more of, the subscribe button is below this video. Next Tuesday, we return to Alex Hormozi, not to praise $100 million offers, but to ask a harder question. The framework that works so well for gyms and info products starts to break in a specific place, and that place is software as a service. Part 2 of our Hormozi coverage is a critique, where the Grand Slam offer stops working and what founders selling software should build instead. The bookshelf is open. See you Tuesday.